Welcome back to the channel, guys. I hope you're having a fantastic day wherever you are around this beautiful planet of ours. Today, we are seeing some FOMO kick into the cryptocurrency markets. Bitcoin has broken the $19,500 level. Now, the majority of my content is macro structured. So we're looking at the macro structure of Bitcoin, crypto, real estate, stock market, to help us better prepare for dollar cost averaging, something longer term. But within the macro, there's obviously micro. And the most difficult thing here is to keep control of our emotions. As lame as it sounds, you probably experienced some sort of emotional response to crazy days in the market. Now, typically speaking, today's bar is not that crazy. If we were in a bull market, no one would really care. It's another 2% day, 3% day, big deal. In a bear market, it can be a little bit crazy because we're not used to seeing 3% in the matter of an hour or two. And even more so when the market is trading sideways in an accumulation or distribution, basically a consolidation, if you don't know if it's going to be an accumulation or a distribution. Even more so crazy with the emotions if we get a slight breakout. So normally we talk about the macro view, but within trying to play the long game, the emotions kick in. So today's video, let's look at the emotional state of this particular bar that's happening right now. I'll get this video up as soon as possible. So make sure you're subscribed with the bell notification icon, click all so you can see it pop up on your damn annoying iPhones there. And of course, like the video up. I'll remind you at the end of the video in case you want to unlike the button as well. All right, so the FOMO is kicking in here. I was watching this as it started to break out. Remember, this is an area of about 7, coming into 8 days, maybe even 9 days now that we've been trading sideways between 18K and $20,000 as well. So we haven't broken out of that 20,000, but our serious level here is at about 19.5K. You can see that the market's been rejected on the 20th, rejected again when the Fed made their announcement of interest rate rises. We tried it again on the 23rd. We had a little fall and the market has basically been getting tighter and tighter. So like we said in yesterday's video, it's just a matter of time until we get a breakout. This is the most difficult time to just hold steady if you have a longer term view, because you see things are going on and you think, damn, I should have got it a few hours ago when it was $1,000 cheaper. So that's why I talk a lot about having that zone in your chart. I've posted multiple times on Twitter as well. So if you're not following over on Twitter, make sure you do that. Links are in the video description. Posted on Instagram. Sure, I get a little bit of pushback from some of these posts, but I just want to bring it to people's attention. There could still be another low. That's no one knows for sure. But this is a sort of crap we always hear at market cycle bottoms, at them or around them. The crash, the mega crash, the recession, the housing crash, depression. Get ready. You know, this thing did really well. You know, quite a lot of retweets here. People have said, who knows? It could be that. It could not be. Keep your pants on. You know, here I'm just saying you've been warned. Essentially, the feelings kick in now when we see the markets start to bounce up. Now, possibly by the time I get this video up, this could have been a fake out. We get a move to the upside, you know, we get a top of $19,900, and then the market basically drops back down to where it was underneath the 19.5K. So the levels for consolidation and for more confirmation on the short term is above 20,500, and I want to take it one step further and say 20,700. That has been a long-standing resistance and support level that I've talked about here on the channel for over 3 months now. So that's this line here, 20,700. And so in the previous videos, we're looking at this as being a trap unless it's broken. So watch the closes this week. So I wrote this in last week, being next week, which is now this week. If you get that riddle, congratulations to you. So it's a trap unless broken. Watch the closes this week. We're above the 19.5 now. So should we hold up above 19.5 and start to put in some more higher lows here on the shorter term, you know, the 4 hour, that's going to be a stronger sign to at least mount a campaign towards the 20,700. So that's a stronger bullish outlook for this particular break. The weaker outlook is the fast pump to that level. You can see that in the past. It happens time and time again. The new trader loves the fast pump. They love this move happening really quick and they expect it to continue on. And that's where people get caught out at tops before the market does almost the exact same thing in the opposite direction. That can be to the downside. You sort of get this move around and then a quick pump up to the sideways and then straight back down. It's the old BART pattern. So essentially, if we do get a fast move above that level, just watch where that close comes in and how long it's able to maintain the previous level of resistance, which I'm calling 20,700, before it starts to put in a higher low and potentially go higher, or before it puts in that higher low or breaks down. So maybe it's the consolidation and then the breakdown. Remember, we've been watching the macro for a very long time here, and the fear and greed is one of those indicators that I love to use, just getting an idea of what's happening next in the market. So the lows came in mid-June. We had some lows in May as well, and the fear was the most extreme it has been almost in the entire reading of this fear and greed index chart. If we go to the max, it does go out a lot longer, but I wanted to keep it in nice and tight just to look at the numbers here. And so the extreme fear was at the current low so far. Now the prices have been at around 18,000 for the last week or so, and the fear has actually jumped a notch. It's jumped up to the 20s rather than being in the teens or the single digits. So we're getting a divergence on how fearful people are of the market at these current prices. So to me, that is basically the fear is wearing off, even though the prices are down, even though the headlines are continuing to be in the likes of the crash of 2022 is coming, the recession is here, the mega crash of all crashes is here, multi-year bear market. I'm starting to see a lot of people talk about this could be a multi-year bear market. That to me is another massive red flag that we are not going to be in this massive long crash period. It's only until we start to see everyone flip bearish that we get this little bit of a pump to the upside. Markets are designed to basically take people's money who are really so far stretched to one side. If they're just so bearish, everyone becomes so bearish, the market flips the other way. So it's basically there. It fools people time and time and time again. That's how history continues to repeat on these markets. The depression headlines, the Fed is about to destroy the economies. We see the Great British Pound capitulating over and over and over again. It's just the worst sort of stuff that we can hear out there. So it's really hard to keep track of our macro view, along with the day-to-day FOMO pumps, which is, again, still happening as I'm recording this video at $19,800. The top is still just short of $20,000. So in the short term, we're just going to see if we can get to 20,000. Try and keep our pants on right now. Don't start getting all premature on this thing. Wait to see if you can get the 20,700. And my next major Wyckoff bullish flip is at 23,200. Of course, some could say it's a long way from the market. That's the way it goes. If you want to be protected in your positions, you need to wait for longer term confirmation. So understand, are you trading short term or medium term or even longer term? If you're waiting for longer term signals, you got to go back onto the longer term charts and look for where those areas are of flipping from bearish to bullish. And those levels are a little higher, like we've covered on the channel already in the previous videos. So stay tuned to the channel. Make sure you subscribed, like the content if you found some value from it. And of course, stick around as we've got some more macro stuff coming up on the channel. A quick look before we go at the S&P, just for those targets to the upside so that we can identify whether this is a trap, the old trap saying, put the warnings on there, or should we really be getting scared that we're going to see higher prices and we're basically going to miss out. So the FOMO kicks in. All right, so the S&P had another down day yesterday and closed lower than it did on Friday. The first target to the upside, this is our 50% tool. Providing the low doesn't stretch any lower, it's going to be at about 3,800 points. So Bitcoin's moving up at the moment. If we start to see the S&P also move up, I'd be looking out for any sort of signs of a reversal at the 3,800 point mark. And then going beyond that is around 3,900 points. So that is basically the 50% level from the decline, and also where these little double tops come in. And yeah, that pretty much lines us up with the 3,900 point level. So we're basically right at the lows of June. Remember, this is the period that I'm looking for a significant low to come into the market. June is a very significant low. So even if we push a little bit lower from this point down to 35s, I'd still consider this as a pretty good low if you've been buying at that time. Like, this is the bottom range, of course, in my opinion, based on the data that I'm seeing out of the charts, basically how I'm analyzing the charts. Now, for the experienced traders out there, quick shout out to our channel sponsor, ByBit. There is 22% left for the claiming of the airdrop, the $1,000 airdrop here. So just follow the instructions down here on the FAQs. I'll leave a link to this in the video description if you want to get on board. They do have 0% spot trading fees at the moment for anyone else that's looking to trade. So use the link in the video description, get up to $4,500 of sign-up bonuses. This one is purely for perpetual contracts. So this is futures contracts, which requires leverage. That's why I say if you are interested as an experienced trader, then you can score yourself another $1,000 using the link in the video description. Limited time here, but there's only 22% left. So make sure you get on board. Check that out in the description down below. A question for that fantastic YouTube algorithm: is this the FOMO pump, or have we seen the confirmed breakout? Let me know in the comments down below. I'll go and check those and reply to you guys there. Until the next video, peace out.